All right, welcome back inside our proactive newsroom. And joining me now is Anthony Ginsberg. He is the CEO of GINS Global Index Fund, of course, with the GINS Global Tech Megatrend ETF that we always talk about. And Anthony, it's great to see you again. How are you?
Doing great. Thanks, Steve.
So, some interesting things happening within the world today. We thought we'd address one of them right off the bat, and that's some comments out from Jerome Powell from the Federal Reserve suggesting that maybe a rate cut might be coming in September. I know the president's been asking for it for a long time, so obviously it would be a positive, I would think, for where you're at.
Yes, absolutely, Steve. Obviously, Tech Megatrend are mostly impacted in the growth stock area, and lower interest rates are certainly a big boost for us. We've actually seen the markets already rally this morning about 900 points on the Dow, but Tech Megatrend, as I say, most of our holdings benefit from lower rates. Also, the global nature of the fact that tariffs haven't really hurt us. We're up 34% since the Liberation Day, April tariffs. We've had a strong rebound the last 3 to 4 months. And actually, interestingly enough, some of the sub-themes may surprise you, Steve. Blockchain last month performed double digits. Obviously, Trump's been a big backer of cybersecurity and the blockchain as well. That helps. The other issue is just the more M&A activity that we see. The fact that the FTC and the Federal Trade Commission, some of the other areas, have sort of backed away from the antitrust rules. So we're expecting a lot more activity in mergers and acquisitions. And just interestingly enough, cybersecurity, digital entertainment, those are all up double digits just year to date. We've had digital entertainment's been the star performer, 26% up, followed by cybersecurity and cloud.
Yeah, and I was going to ask you about that. The trend obviously continues, and it's the cloud, cybersecurity, and all of that has been really talked about in the news a lot lately about all the companies that continue to provide these services around the world, and just how important they are and how they continue to grow.
Sure. Actually, one of the hidden secrets is that with all the talk about AI, cloud computing actually is spending more money at the current time than the AI folks. So we've got about a $3.5 trillion spend on cloud, and the AI spend is about $2.5 trillion. But most of the big hyperscalers are the key leaders actually in taking advantage of AI. So folks like Amazon, Google Cloud, we've also got Microsoft. They've obviously all benefited. The issue for us is spreading the risk a little bit, and we've got this equal weighted approach, as you know, with 15 top leaders across our 8 sub-themes, from cloud straight through to cybersecurity, AI, robotics, social media, etc. It just spreads the love a little bit globally, so we don't have just a US concentration. At the moment, the US is 55% of our holdings, but actually the Chinese holdings last year were dramatically undervalued. They've actually come back strongly, Alibaba, Baidu, etc. So we've actually benefiting, frankly, from the global pickup, and the fact that tariffs haven't really impacted our services sector. Of course, Trump's really gone after the manufacturing side. So the services area that we're primarily involved in really hasn't been hurt much by tariffs.
And because of the global approach that you have, is that a benefit for the ETF, considering that if one area slows down, another one picks up, and that sort of keeps the fund where it is?
Yes, and interestingly enough, the weaker dollar also helps us. Everybody's sort of worried here in the US about the weaker dollar. Interestingly enough, it actually boosts our earnings from abroad. So a lot of our holdings, obviously the American holdings, in some cases up to 50% of their earnings are non-US denominated, and bringing that back into dollars actually translates into higher earnings. So it's actually a tailwind for us. It's actually been a benefit. So we're actually not as concerned about a weaker dollar. We actually think it helps boost exports. And interestingly enough, the global demand for things like AI and cloud, it's more nascent. It's still in the earlier stages, earlier innings. So we've seen markets, certainly developing nations from Latin America to Southeast Asia, even Africa, they're in many cases leapfrogging some of the technologies, and just the spend has actually been very, very impressive outside the US too.
Okay. Anthony, what are you looking for in the fall? What's some things you're keeping an eye on?
Yeah, I think the key thing is also I mentioned earlier on the M&A activity. We see more and more cloud companies getting into the cybersecurity space. Also, things like digital entertainment converging with the likes of AI, cloud, and social media. So I'd be on the lookout for more M&A activity. Obviously, some of the stock prices have gone up a fair bit in those areas. They've now got the currency to actually make more acquisitions. And as I mentioned, the Trump administration has been more tech friendly as well. And don't be surprised if things like our blockchain sub-theme continue to outperform, given the frankly the tailwinds coming out of DC in that space, particularly in blockchain, crypto. Even though we don't buy crypto specifically, it's been a big help and boost for adoption of blockchain. I would just say one last thing, Steve, is digital entertainment and social media are increasingly cousins, and we see a lot of overlap there with corporations spreading their wings in both spaces.
Absolutely. Anthony, thanks so much. Great insight as always. Good to see you again.
Thank you, Steve.
All right, Anthony Ginsberg, CEO of Gins Global Index Fund.